The reason why semiconductor is not just an industry among many, but really is at the core of everything we do today is because it's really fueling all other industries, from biotech, from health tech, from automotive. And so it is really a foundational technology, super important for the AI compute space. You need a brain and you need to have the memory, and then the connectivity in between.
The data centers that are required to run this technology are massive, and they leave a very large footprint. They require a lot of resources, and then just to make the chips that are going into these data centers requires an equally magnanimous amount of resources.
Everything we do today is run by chips through chips, and data is the oil of the 21st century. But really the biggest risks, definitely, and that's no surprise, are tariffs, are the disruptions in the supply chain. And again, this is one of the problems that the entire industry is struggling with. So it's incredibly complex to design these chips in the US. On the other side, the manufacturing of these actual chips is 70% and more, depending on the node, done in Asia, specifically in Taiwan. A bit of Japan. South Korea has a great strength, but then increasingly also China. So you see the separation between where a lot of the new designs are happening and where the manufacturing is happening because of cheaper labor prices and energy costs.
I think the hallmark of what the administration so far is doing is they've recently upgraded the tax credit for any companies building a fabrication facility within the United States by 2026. There are a lot of chip designers, but there are fewer companies that manufacture, or they also manufacture the chips that they design. And so being able to do that is going to be a huge advantage. We're seeing that be a trend across the world, where increasingly companies are realizing it's probably not a great idea for us to concentrate our manufacturing in one place. They're realizing we need to go ahead and at least onshore some of our capacity because it could be a national security issue.
If you want to consider the major players in the semiconductor industry, growth definitely is in the compute space. And there you have semiconductor design companies like Intel, AMD, Nvidia, and then more on the memory side, Micron, have specialized in design of the chips. And again, this is incredibly complex. You're talking billions and billions of transistors on a chip the size of a fingernail. And these design structures, architectures have been leading the industry for decades.
When it comes to Nvidia, that's a perfect example of just globalization, right? Something that is, we say, okay, yes, it's US, and it's a really big feat for the United States. And then we look after Liberation Day and see just how interconnected that entire business is. So yes, we say the expertise, the chip design, incredible, what a feat. But then we look at the fact that that business fundamentally is not the same business if we have to sort of cut the world out or we tax the existence of the rest of the world in their sort of supply chain. We know that there has been that friction of exporting chip design to China, what they are allowed to have, right? And how they're getting access to it. So that friction continues to grow.
China is only 3 to 6 months behind the US in terms of AI technology. On the chip side, it's still a lag of about a year or two, but they're catching up quickly. And so the choice really is, and it's depending on where each individual company is continue to sell into China, to use the market and to take advantage of the revenue that is there. But on the long term, the strategy needs to be able to not just do without those revenues in China, but actually compete with a Chinese competitor. And what we see now is that this globalization that has brought much of the progress in the last decades is now being brought back into a regional setup, which will bring higher costs. It will bring also a loss of speed and innovation.
The biggest risk that the semiconductor segment is facing right now is a shifting global trade order. We have seen the fear that it instills, not just in the investors, but in the operators of these companies. And this is not a surprise when we look at any industry that's this globalized, but especially one that is really about to start a secular wave of massive growth. So that's going to be the biggest issue in the near term. In the long term, it's going to be the operators and the scale that will prevail, as well as the sort of friendly tax policies and regulations in each respective domicile.